Okay, for all our trades, we take only one position. What it means is that we have 5 different setups, and out of all those 5 different setups, we take only one position for each setup. Okay, so it may be one position for euro dollar, second position maybe for pound dollar, third position dollar CAD, unless I specifically say scalp or breakout trades. That means that you can take additional trade in scalp breakout direction. It can be also called second entry. Don't forget that all trades we trade the first touch of the zone or the level. So when you see positional trade or alternative trade, we want the price to get close to our zone, and then you place your trade. There is no trigger. We don't take any crosses, stochastics, confirmations, whatever. We trade the price. Okay, how do we trade the price? We trade in the zone. So when price gets in the zone, we open a trade. We don't have any other confirmation than it's the zone. Okay, position trades are trend trades. Alternative trades are counter trend trades. Breakout trades, scalp trade levels are done independently, so it can be a second entry. Depending on time and volatility, usage of trailing stop is recommended. We never ever take any profit unless we at least made 20 pips. So we never ever close our position until at least made 20 pips. Of course, it usually makes more than that, but we need to be careful because we actually want to respect the momentum, the price, and we don't want to actually risk 30, 40 pips just for 5 pips of profit. We don't do that. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. Scalp trades should be done at or very close to important support resistance levels. All scalp trades are calculated by historical levels and Camarilla. You can add these levels to your system, and don't forget that I do occasional Twitter updates. So, for example, last week we had revised trade for pound dollar, and if you actually took the trade, you could have made nice amount of pips. So pound dollar was great because our session recap trade didn't hit our entry position. Next day I did revised trade. It was published as exclusive analysis on forexstreet.com, and it was very clear with entries. So I guess and I hope that you made some money on pound dollar. Past week results. Okay, this is the wrong date. That is actually 7th of March 2016. So past week results. Euro dollar good for bad for it. It was a loss, minus 40 pips. Okay, minus 40 pips on pound dollar, on euro dollar. Sorry. Well, actually, some people took the late breakout trade and made up for the loss. So if you had taken a breakout trade, you could have made money. But the original positional trade was actually a loss for minus 40 pips. Okay. Well, we can't win them all, as we say. Pound dollar was good for 70 pips. Australian dollar was also good for 70 pips. So these are maximum pips pool. Dollar CAD, you could have made 200 pips. Euro GBP, well, again, some people told me that they made some money, but to be honest, I had a loss on Euro GBP. It hit my stop loss and then it went in a profit, but some people told me that they add a little bit more to their stop loss, so they made some nice money. Chris Bentley saying, I got stopped at break even on dollar CAD after protecting for 30 pips profit. should I manage differently? Well, Chris, that is always the hardest part of trading, how you will manage your trade. We don't have any specific rule how you can manage your trade. What I would do, for example, is that if I were you, I would probably took the half of my trade and put the rest to break even. That way, you're ensuring some profits. Of course, you're halving your profit, but actually you're riding a free ride. So let's say that you open a trade with, well, it's good. Then you again made some money, right? Because let's say that I opened 0.5 lots on dollar CAD. Price gave me 30 pips. I took 0.2025, right? I made some profit and I put the rest to break even. So it doesn't matter, there are no specific rules. You can write your own rules saying I would protect my trade I usually do after 20 pips if I see that there is no momentum. But sometimes, let's say, if I open a small position, risking 0.5% of my account, that is time when I really don't care. So it depends what is your risk. Obviously, if your risk is higher, and guys, please listen to it. I'm not talking specifically to Chris. I'm talking to all of you. So if you have more than 0.5% of risk in any given time, what you can do is actually take the half of your profit and put the rest to break even. That way, you're ensuring good profits. I mean, you're ensuring money also. And in the case you're trading with a small risk, let's say 0.3 or 0.5% of trade, then guys, you can leave it, let's say for 30, 50 pips, and then, I don't know, maybe close a very small part or put the rest to break even, or maybe take the whole position. Because when I do swing trades, I'm not paying attention to small price movements. 20 pips, I usually leave it even to go after 20 pips. So it's really subjective how you will manage your trade. Of course, well, it's basically, well, it's how you see your trade, how you actually look at your account. I have a friend who is actually excellent equity trader, and well, he doesn't care really. He goes with very strong position trading DAX index. Mostly he trades DAX, and he is very good in that. But actually, he really doesn't care about risk. He can make a huge money really, but actually he's risking a lot. So it depends. It depends what type of trader you are. I personally, I can risk a lot only if I go with, like I showed you, building up small account. Then I can risk a bit more, because I really don't care if I lose $200 account. I really don't care. It's not too much. But let's say if I traded 15,000 euro account, then I'm a bit more conservative, because I don't want to give 10,000 or 15,000 euros to the market, indeed. So that is what it depends really on your style of trading. Yes, Chris is saying actually moving stop loss to break even kept it from potential plus 200, though 30 pips still better than a loss, indeed. So you should not grieve about it. Market is here. Some people can do that. Some people will risk. Well, let's say if you open 0.1 lot, obviously maybe you would go for a full profit, right? Because risking only 50 pips for, I don't know, 0.1 lot is actually worthwhile, right? So it depends really. If it gives you your peace of mind, then protect your trade. Simple as that. You don't want to be stressed. So whatever it takes, that you don't want to feel stressed. So if you're feeling okay with your risk, then it's okay to even take a full profit after 30, 50 pips. But if you're not comfortable, then scale out, put the rest to break even, and go out. You don't have anything to lose. Okay, you're welcome, Chris. And okay, Kusuk Desai is telling me that I made a wrong calculation. Total pip pool is 265 pips. Let's say 30, 100, 300. Indeed, total pips pool is 265. Thanks Desai, I will correct it. Well, to be honest, well, I think I made like 70, 80 pips out of this, but still not bad. As I always say, guys, this is free money. You're making free pips, and actually, you know, whatever is free is good. So don't grieve if you didn't make 200 pips. I personally made like 80 pips. So some people made more than I, okay? So it doesn't matter. It's still okay because you're in profit, right? This was euro dollar trade. As you can see, we were stopped out at our long trade 0.925. Well, what I can say about this trade is actually this trade happened here. You see, there was a strong stop grabbing momentum below our level, and then of course it went to profit. It usually happens like this. When we are stopped out, the trade goes in a profit subsequently. Now, some traders actually took this breakout because this was very strong breakout after NFP, right? And those traders who traded 0.1040, because I specifically what I said is if the price goes above 1040, we can see easily 101140, sorry, 1.1140. Well, yes, Ilya, this happened after basically it happened after ECB conference. And yes, you were right. Yes, you were right. I didn't trade this, but some people told me that they actually took the trade here and that it made a huge profits, because you know some people are actually like to trade momentum trades. I didn't trade, but some people did. And that is actually the difference between all of us traders. Even though I was a bit sure that this setup could have brought me some good pips, because I am also a momentum trader, I didn't take the setup simply because I didn't feel it was appropriate to take any trades during Draghi or after ECB announcement, because you saw what happened. Well, you saw what happened. Actually, there were some QE announcements, and first of all, what happened is Draghi announced additional QE measures, and well, the price dropped really by a huge percent for that day, straight for 150 pips. But later, during the press conference, he stated no more rate cuts, no more QE, and look what investors did. They massively closed their short positions. And as you know, every single short that is closed is an automatic buy into the market, and that created a huge momentum spike to the upside, and actually euro went to 12 after went to 12.00 and above. Now we have a correction, so I think we can also buy the dip. But the thing is, what I wanted to tell you, some people told me that they had actually entered here and that they have made some good money at this price here. Ahmad is saying he cannot read the numbers on the prices. I don't know, guys. Maybe it's your internet connection, Ahmad, because I can clearly see the numbers here. And as I told you guys, maybe I didn't make a good assessment of euro dollar trade, because I see that some people have been telling me now that actually they made money with euro dollar. Let me check, guys, please. Let me check it. Give me just okay. I will check it, because they actually made money on their long trade. Let me check. Okay, we can check it together. It was basically right the 7th. Okay, let's do this together. 7th of March, and that was when we had a webinar. This was webinar time, and this was our level. So the low was, well, 20 pips from my level. Actually, this trade wasn't qualified, but okay, if you made some money, it's great. But actually, the trade wasn't qualified, although it went 100 pips in a profit here. It was 5 pips shy from our POC zone. So because of that, I cannot count this trade as successful. So I will still keep the results. But well, if you made some money, great. Pound dollar, this was the analysis for pound dollar, the revised analysis that I published on Forex Street, because our trade didn't go anywhere. We didn't have a setup kicking in. So actually I did a revised trade setup, and that setup gave us some nice pips. Let me show you. Okay, I will open it here. It was pound dollar rounding bottom in progress, and this was actually here we had even 2 rejections from 41.90 and 41.10 zone. So even though if you traded both of these, it still would have been profitable. But as I always say, the first rejection is the best. So here it was our POC, and look what happened. Here within the first POC, bang, straight 70 pips to 50 to 70, and here also. See? So pound dollar was actually very, very good trade. Australian dollar, as I said, Australian dollar was also profitable. You can find it here. We had a sell initiated at 74.85. This was our sell position. The price made like 75 pips before it jumped again. So Australian dollar profits again on Australian dollar. So that was also a very good trade. And you see, Australian dollar is a bit rangy, but I'm very happy when I see it. Chris is saying he missed entry by 0.5 pips. Well, you should never do that. For example, if you see that the trade setup is very close to your entry point, what you can do is divide your trade. That is what I call a scaling in. You can divide your trade. For example, if you saw that the price will be very, very close to the POC zone, that is at 75 to 74.85, even if the price goes to 74.83, 82, open a small position. Let's say you want to open 0.3, open 0.1, and then as the price goes within the zone, just add. So yes, I know it feels very stupid to actually miss a trade by 0.5, but it happens. So if you don't want it to happen, open the smallest possible position around the zone, let's say 2 or 3 pips shy from it. That way you will be securing at least some profits if we don't have a retracement fully into the zone. Dollar CAD, yeah, limit order. I know limit orders sometimes can really mess with our trades. I know that. See dollar CAD here. Dollar CAD was also very good, and definitely, in my opinion, this was the trade of the week. actually dollar CAD made huge amounts of pips. As I said, we could have sold it at 34.05, keeping the stop loss at 34.50. The price went 40 pip in a drawdown, but it was strongly rejected towards 32, where our take profit was. And well, some people made huge amounts of pips, so some people made less, but either way, this was the profitable trade, and definitely dollar CAD is the trade of the week. Euro GBP, as I say, some people made money, some people lost. I personally, well, it hit my stop loss, but I saw that some people put 6 to 7 pips and they were very close to being stopped out, but actually they made it. Well, it was an unfortunate trade because as soon as it hit our stop loss, it went in a profit. Well, paradox, right? Paradox. But it happens. It's the way of price, the way of trading. And even though I am occasionally stopped out, not very often, but occasionally, it always do the same thing. It always does the same thing. It hits my stop loss and then it goes to the profit. Strange, but it happens. Well, it's the way how also institutions trade. I had a friend, and I still have a friend, who actually traded for Citibank. He was a great trader, institutional trader. And he said that it just, when bank traders trade, it just, they're also very occasionally stopped out. So if you're 70 to 80% successful, it's excellent result. And we've been like 80% successful during session recaps and even during the analysis. All these analyses that I've been posting on our IM Markets website and forex3.com, well, 80% are successful, maybe even more, sometimes even 90%. So the biggest problem is actually how to manage your trade once you're in a profit. And that is actually it's your own personal thing. It's very subjective. Because the thing what I do with my trades, it depends on different factors. It depends whether I go with scalp, it depends whether I go with small account, if it's swing account, if it's a bigger account, if I'm building up the account. So there are no robotic rules. We are not robots, we are humans. And Chris, the answer is no. He asked me, do you always scale in 15 pips early? No. If I do it with very small position. For example, if I want to open 0.5 lots on a trade, I can scale in like 0.1 or 0.15. And I can add 0.20, 0.25 once the price retraced into the zone. But if I do that, I would open always a small position. Roughly one third of the position. So that way I'm still in a profit if it doesn't retraces to the zone, and I'm still happy. Because you know what you should be happy with making pips, not just the money. You know, guys, if you want to trade faster markets and you want really to trade mostly for the money, then equities is even better option. Trading DAX, S&P, FTSE, those indices. So when you trade DAX, let's say if euro dollar makes 50 pips, DAX will probably make roughly 150 or 200 pips. So momentum traders prefer equities. But if you're not into that big of a risk, and if you really don't want to risk and to sweat, then stick to Forex. So this was for the previous week. Now let's go with euro dollar setups. Watch for T89 buy at 10.90. If it happens, T89, you know what T89 is. Maybe you can try to set up for a trade, but T89 is actually a rejection from EMA 89 around 10.90. Positional trade is 10.70 by 10.30 stop, 12.20 target. And this is how it looks. Okay, here 1 hour time frame. Here, this can be maybe T89, but it needs to make a candle. This is T89, although the candle is big, but this is how T89 looks. Look at this. T89 here. This is also T89. Well, Oscar, if you don't know what T89, I advise to actually go through my webinars where I mention it's price action trading school lesson number 1, I think. I explained what T89 is. I can explain in short that this is EMA 89, and if you see a rejection that looks like a tail, it's actually T89. So this is T89, this is T89. You can find a lot of examples of T89. This is T89 to the downside. Look how price respects EMA 89. This is T89 to the upside. So yes, Apostolos. And guys, these trades are valid for today and tomorrow. We don't trade tomorrow, after the day after tomorrow, because it's Fed. So Fed is in 2 days, and we will not take trades on Wednesday. So these trades are valid for today and tomorrow. Predrag is asking, what kind of MACD is this? This is actually MACD Camarilla MACD. If you MACD Camarilla indicator. So if you want this indicator, just send me an email. Oscar is saying only in 1 hour time frame. Well, you can also find it on every other time frame, but for intraday setups, 1 hour is good. 1 hour is the optimal time frame in between intra-week and intraday setups. So I only have a buy position because I really look at this. Look at this. It's too heavy to the upside. So this could be a potentially good trade. Look at this. This was bearish retest. Look. And actually at the same time we had a possible retest of this level. So this could be where now moment buyers are, and I don't have a sell position because I would like to see a buy from the zone along. Okay, look at this. The same line is this one. And if the price now makes a U-turn to the upside and closes like a hammer, that would be qualified T89. Pound dollar is in uptrend. There are possibilities for 43.50 longs straight from these levels where pound dollar is now. As I say, there are possibilities. See? But it's end of day now, and maybe scalp only. Yet again, we might see some rejections of the zone because you can see It's also what my analysis said today, so you can always watch a full analysis here. See, and the price now is trying to reject from this zone. Here. And this is it. So the price is trying to reject this previous triple top. And if it doesn't reject, as I say, this could be another possibility to go long. Is asking, Nana, the Fed does not raise rates and the trade of buying euro is profitable. Should we leave it open for a higher price? Yes, but only if you protect your trade. And that would mean close the part of your trade, put the rest to break even, or at least immediately put the trade to break even, because it might go up and down. It's always when strong news is released, price goes up and down. The question, if the price is having two POC, where should stop loss be at? Well, if you have the first position, then obviously below the last low. What I would like to see actually a rejection, and I would place a trade just below this previous low here, just below this region. On the other hand, if we see a rejection at 49.60, that is 42.10. Okay, 42.10, I will mark it. Below this descending trend line here. Straight down below this candle. This candle is 42.11 and 42.10. Add a spread to your stop loss, of course. 3-4 pips. This could be your stop loss. So we still need to see rejection. We don't see any. So let's see what the price will do. As I say, it's a bit of nasty time to trade now, because the price is, you see, there was a bit of rangy day today. There was not big movements. So we would need some time for the trade to develop. Australian dollar 78, 74.80 buy, 74.40 stop, TP 76.10. Yes, the sell is very high. Okay, the sell is very high here, 45.50. I will mark the level. $45.50 here. Okay, like this. See daily time frame rejections here. I couldn't have found really some rejections below. So this is where I would like to short. Look at these rejections on daily time frame. So that is why I would like to see it higher for a sell. But probably this would be a buy before a sell. So this is your target. Okay, my email is tarantulafx@gmail.com. And this is Australian dollar. See? 74.80, somewhere around this region. A lot of confluence here. But this could also now proceed to the upside. It's not a perfect T89, but if it was for a bigger tail, this would have been T89, straight from EMA. Dollar CAD is in downtrend. Possible sell T89 at 1.33 or sell position 33.70, 34.10, 32.30. See? So possible sell 33.00, sell position at 33.70. So if the price gets to 33.00, we could see another sell. But 33.70 is what I would like to, what I prefer at this point. Look, a lot of historical selling here. Sell here, double bottom, sell again. And look how EMA 89 shows a neckline break here. Because this is head and shoulders. And look at EMA 89. It's really a great indicator. Finally, dollar yen, 414.20 is our entry, 114.50 is stop loss, 112.50 is our target. So 114.20, 114.50 stop, 112.50. Now guys, I will go through these slides again, and if you have any questions, feel free to ask me. So this is a setup for euro dollar. This is pound dollar. Australian dollar. Dollar CAD. And dollar yen. So now if you have any other questions, guys, please ask me. What do I expect of FOMC? Oscar is asking, do you see dollar bullish or bearish? I think it might be a bearish statement. Actually, I think there is no rate hike this time. So actually, that could be a bit of dovish statement. Claudio is asking for a slide, euro dollar. Here, Claudio, euro dollar. Cheers. Claudio, Derek, Orion in pound Ori. Karim is saying Camarilla settings. For 1 hour time frame, our Camarilla settings is actually weekly time frame. But if you notice that L5 or H5 are broken to the upside and price is way above L5, way above H5 or way below L5, you should go to monthly. On 1 hour, the default is daily. Okay, like this. So default is daily. But if you go to 4 hour, then you should move on to weekly. Sometimes I even open 1 hour on weekly because it's still okay. The levels are a bit spread, but still it's still good. But I prefer daily on 1 hour, and 4 hour I prefer weekly. Okay, now the analysis, the quick look at okay, where was the comment? AUD yen and pound Australian dollar. AUD yen is bullish, definitely. So look to buy the dip. And from intraday perspective, so I would also go for this level here. This is 4-time rejection, so if you're in a trade, maybe it could go to the upside. It looks like it could go bounce from this level because it's 5-time bottom. But if it proceeds down, then this is your zone to look at. But it's bullish. And pound Australian dollar. This is bullish also. Look. This is what I also want from euro dollar. So we want the price to dip and buy it. And actually, it happened to pound dollar here. Look at this, guys. Watch this. It went up, it retraced, and it's being bought into. Bullish price action on pound Australian dollar. It's too late for any other additional buy. Maybe it will reject from EMA 89 if it stays above it. But this is where you could place your buy trade. Just after this double bottom here. EURGBP ranging. Also same as euro dollar and pound Australian dollar. I would like to see down there. So somewhere around here. For another buying opportunity, somewhere around this region. Gold. Here, the gold, bearish. See, it's going below EMA 89. This was T89. And here, you can see rejections of EMA 89 and H3 zone. So this is bearish price action. Next question is, okay, I know it's quite complex, but could we have a webinar about how options affect prices? Yes, I can do that. I hope I won't forget about it, but yes, we can do it. Maris is saying there will be no more QEs in USA, then the stocks will fall. We don't know it. We need to see the statement. What about SP 500? Is the 1025 good time to go short? It could be. Yes, it could be. Because historically this region has been providing rejections. So yes, it could be. But be careful. Because we don't know what the statement will have in it and how the market will react. So be careful. Yes, pound dollar could be scalping. So 43.15 possible scalps. Oscar is saying, what does POC stands for and what is it? It's actually point of confluence. Oscar, please read all of my analysis on Admiral Markets website. Actually, it's point of confluence and it's also known as entry zone. So POC, aka entry zone. Okay? Entry zone, where you place your entries. Euro yen, any opinion? Again, same as euro dollar, following the almost exact same pattern. Deeper retracement, possibly towards 125.70. And then maybe opt for a buy trade here. But the price needs to retrace. Okay, do I have a minute for VTI? Bearish. Here, this is your possible entry here. You will have a confluence of L5 retest, EMA 89, and previous sell, breakout sell. So it looks bearish at this point. And EURGBP, I don't have any particular opinion. I don't like when price makes movements like this. This is heavy range and I don't support it. I don't like it. Heavy range on EURGBP. Okay, guys, if you have any questions, go ahead. New Zealand dollar. We had a good buy position on Friday and actually it hit the target. If you remember my analysis, I will show you. Here. And what happened is after the analysis, price went here and hit the target. So I said momentum above, the price got in a huge momentum and it hit the target. So yes, New Zealand dollar hit a target and it looks bearish now. Look at this, N, inverted N, 1, 2, 3, inverted N. Kusuk is saying, when are you planning to have webinar for low to high build up? Well, possibly soon. The first stage has been completed. Now it's waiting for better setups to actually go with a momentum trade. But yeah, we will have it. And Chris is asking, once more, what confirms T89 entry dollar CAD? T89 would be actually a rejection in the form of T89. This is T89. Sell. This is T89. Buy. This could have been T89 sell. This could have been T89. So just a close. Look at this. T89. Not a perfect T89, but buy. This would be great T89 if it happened here. T89 sell. So just a close of the candle. Okay, so Chris, the close of the candle in the form of T89 pattern will confirm your entry. Is T89 same as EMA? No, EMA is moving average. T89 is the pattern. So this is the pattern. Okay, here, see the pattern. Rejection. So a hammer or a tail, it's better to say a tail of the EMA 89 is actually T89 pattern. So that's it, guys. I don't see any further questions. So let's see what the price will give us. Pavel is asking about dollar ruble. I don't particularly trade dollar ruble. I really never take a look at that pair. I don't know if even I put it on my chart. It should be here, but I don't follow it. So maybe next time, remind me at this time. I don't have it, but I guess I could do the analysis. I just need to go a little bit more deeper into ruble, because I need also to know some fundamental facts. At this point, well, you see, I don't even have it here. Dollar ZAR, okay. Here you see a strong uptrend. This is inverted head and shoulders. And if you had traded this, you could be in a great profit. Look at this. Left head, right shoulder, neckline, breakout, retest. This is a great example on dollar ZAR pair. See? Left head, right. Breakout, retest, continuation. All in one. Excellent, excellent movement. So Pavel, please send me an email and I will see what I could do about dollar ruble. But I don't have it here. Yeah, here there is, but I still need to. Just by looking at it, Pavel, this looks like a bearish trend. But you see, there are a lot of gaps here. I don't like to see gaps. So it's bearish. As long as it's below EM 89, it looks very, very bearish. It's capped. Martin is saying, I think you tweeted something about master candles. Is there a webinar? Yes, Martin. There is a webinar also with Admiral Markets about master candle. You can try to find it. It's called High Momentum and True Breakouts. And also, if you go to Forex Street Premium, you will find master candles. So yes, there is. Oscar is saying, what is the best way to contact you in the case of further questions? My email. And my email is tarantulafx@gmail.com. So you can contact me. Sometimes I may be a bit slow with response to your emails, but guys, that is because I have tons of emails each day, and sometimes it's impossible to answer. So, okay, this was it. So let's see what this week will give us. Be careful. You don't want to trade during Fed. You want to trade before Fed today and tomorrow. Okay? Because there will be huge movements. Okay? So guys, as I always say, cheers and trade safe.